The stock market. It's one of those terms we hear all the time, but what exactly is it? Let's break it down. At its core, the stock market is a place where people buy and sell shares of ownership in companies. These shares are called stocks, and when you buy one, you essentially own a tiny piece of that business. Think of it as owning a small slice of a giant pie. But why does this matter? Well, companies use the stock market to raise money. Instead of borrowing from banks, they sell shares to investors. In return, investors get the chance to make money as the company grows. If the company does well, its stock price goes up. If not, it can go down. So how do stock prices change? It's all about supply and demand. When more people want to buy a stock, the price goes up. When more people want to sell,
the price drops. Simple, right? But don't be fooled. It can get pretty complex, which is why the stock market is such a fascinating place. It's driven by countless factors: news, earnings reports, global events, even investor emotions. Whether you're looking to grow your wealth over time or make short-term gains, the stock market is a powerful tool. It's not just for the pros. Anyone can invest and start building a future.
Now that you know the basics, now let's talk about how stocks actually work. When you hear someone say they own stock in a company, what does that mean? Let me explain. When you buy a stock, you're buying a small piece of a company. This piece is called a share. Imagine the company is like a giant pizza, and each share is a slice of that pizza. When you own a share, you own a small part of the company's success. And the more shares you own, the bigger your slice. But there's more to it than just owning a piece. As a shareholder, you might also get voting rights, meaning you have a say in major company decisions, like electing the board of directors. So even though you're just one person, owning stock can make you part of something bigger, contributing to the future of that company. Now, why would you want to own shares? Because if the company grows and becomes more valuable, your shares do too. Stock prices go up as businesses succeed, and if you sell your shares at a higher price than you bought them for, you make a profit. Plus, some companies even pay dividends, regular payments to shareholders just for owning stock. So in a nutshell, when you buy stock, you're becoming part owner of that company. You benefit from its growth, have a say in some of its decisions, and might even earn extra income through dividends. Understanding how stocks work is the first step toward making smart investments and building your financial future.